this whole idea of we're on the cusp of a recession, all these bad things are going to happen. The market's really not suggesting that right now, and particularly in areas where there's a lot of money and capital being spent on growth and growth outlooks, utilities, build out, AI, all that. A lot of money flow going in those areas, kind of that industrial injection into the economy. We're still seeing that. So again, the market's really not telling you much about recession concerns, and it's at least something to pay attention to. Here's what you need to know before the bell. Market sectors can tell you a lot about what's happening in the real economy, and again, where money's being spent because it reflects into earnings. Investors also tend to invest in areas of the markets that are doing very well versus those that aren't. And so, money chasing money tends to give you some indication about concerns over the economy. So lots of concerns lately about it's a recession, we're having all these other issues, it's the debt, blah, blah, blah. Well, let's take a look at some sectors that are very economically sensitive. This is basic materials. Of course, these are your basic companies. This is Caterpillar, this is Deere, this is people out there, building stuff, manufacturing stuff. Money flows have been definitely coming into that sector after, obviously we had this impact from tariffs, concerns over what tariffs were going to do to basic materials, stocks sold off. But since that sell-off, they've been recovering nicely. So again, money flows kind of coming into that. And that wouldn't be the case so much if there was really big concerns about what was happening in kind of that overall space. But communications, now this is, Meta, this is Google, they're kind of in this space, but we've seen a lot of recovery in communication, particularly since that sell-off. Again, concerns over the Mag 7. Where's a lot of money getting spent right now in terms of CapEx? CapEx right now for the Mag 7 stocks, in particular Microsoft, Google, Amazon, those are at all-time highs. Where are they spending their money? They're spending their money on artificial intelligence. That whole story about AI is dead is not really much the case because they're spending a lot of money on CapEx, and CapEx just hit a new record. Now, where are they spending their money? They're spending their money in the technology sector because that's where NVIDIA, AMD, and the companies providing the chips for AI live, along with other AI companies that are building and developing AI. XLK has had a very, very sharp rise here. Now again, some of that is, XLK is driven by the Mag 7 as well, just like all these other things, but Palantir is up 60% from the lows. Palo Alto Networks has had a big rally here. So companies that are involved in AI, Salesforce, others, those companies also benefiting from the money flows into that AI sector. So that whole thesis about AI was dead just a couple of months ago certainly seems to have turned away. Now look, markets are getting very, very overbought here. We're probably starting a short-term correction here. But again, where have money flows been going? If I want to be an investor, I want to know where other people are investing their capital, and I'm going to kind of chase that capital rather than trying to fight the tide. Areas like utilities also are one of the things that we've talked about previously. Utilities have had a very sharp rise. Now, here's the thing about utilities. This is more right now about AI. Interest rates typically tend to be a negative for utility companies. Utilities are typically very interest rate sensitive, but now we've shifted the narrative of utilities from a defensive income producing asset that basically trades off interest rates is now trading against AI. The need for power generation for AI, etc. Money flows have been going sharply into utility stocks. So those companies have been really helping hedge portfolios as of late. But speaking of interest rate sensitive stuff, then we take a look at XLRE or real estate. Real estate's improved a little bit here, but it's really been under pressure because of the rise in rates. So interest rate sensitive stocks like real estate certainly remain under pressure. But again, real estate hasn't done a whole lot here over the last bit because of this rise of interest rates, but they've been kind of holding water, which is suggesting there's still a lot of money flow coming into the overall market that's helping give it some support. And obviously, since that kind of tariff relief, real estate's recovered kind of with the rest of the market, but not as much as other areas. Another economically sensitive area is transportation. Transportation's been improving as well. Energy also, despite the fact that energy's been coming down here, we've seen some money flows back in energy as well. So this is the energy stock sector. So again, still seeing, kind of some of that concern over economics for certain in areas like energy, which is very economically sensitive to consumers, but we're still seeing improvement. So again, this whole idea of we're on the cusp of a recession, all these bad things are going to happen. The market's really not suggesting that right now, and particularly in areas where there's a lot of money and capital being spent on growth and growth outlooks, utilities, build out, AI, all that. A lot of money flow going in those areas. Kind of that industrial, kind of injection into the economy. We're still seeing that. So again, the market's really not telling you much about recession concerns, and it's at least something to pay attention to. But that's what you need to know before the bell this morning.